All right, so we're still in a low volume environment. If you do have a look at the 24-hour liquidations, you can see the majority in this instance are coming from the long side, given the recent little dip that we just had within the market. So in today's show, we're going to have a look at when the tides may potentially turn and when is the most optimal time to start to actually build a crypto portfolio again. Is it something you should even be considering? You can vote in the poll section below. I'd love to know what you guys are currently holding. If you go through to the poll section, there is a poll in the comments over here asking you how many coins you're currently holding in your portfolio. Is it one? Is it more than one? Are you holding more than 50 different coins? Just so we can see where you guys are currently at. And then we can best make a plan, right? So daily exchange volume is still moving towards the downside over here, but you should expect that there is going to be a bit of a bounce to set in the next lower high, or possibly even break out from these current levels. So in the short term, I think you would be looking for, in the coming weeks at least, a little bit of a relief rally. The question is, should you be establishing a crypto portfolio into the bottom before that relief rally actually takes place? And that's exactly what I want to discuss in today's show. I want to show you the exact trigger plan that you're going to be looking for to determine when to actually start to build those positions. There is liquidity both on the up and the downside, of course, because we're in a choppy market right now. You got $20 million worth of liquidations at $85,000 Bitcoin price, and about $20 million at 83,000. So really forming a super tight trading range over there, which means that you should expect at some point there is going to be an explosive move, right? And of course, the huge question that everybody's asking themselves is the cycle over, right? Have we deviated away from the price cycles? This is the purple over here is our current crypto cycle. And you can see, absolutely, we are deviating in terms of return on investment of where we should be comparing to the price cycle as well. We're definitely underperforming in an absolutely massive way. But you can see you did put in those corrective phases during the months of April, May, June, July, in the 2017 cycle as well as the 2021 cycle. And this cycle, everything has seemed to front run by about 2 months, which means maybe, just maybe, this is a shakeout. Maybe, just maybe, this is a consolidation and a reaccumulation phase, similar to what we saw in that April, May, June, July period in the price cycles. So if it is front running by 2 months, we do need to pay attention for when that mean reversion play comes in. Is it going to snap back into the normal cycle, and are we going to lead into continuation? And that's really what I want to discuss in today's show. Now, for the most part, you guys know that I've been completely risk off in the market in 100% cash position. And we've said pretty much neutral until such time as price breaks out of this over here and either A, reclaims into this territory over here, or B, tests down into the lower support regions. Until then, we do absolutely nothing. But given the fact that everything is getting into a tighter and tighter range with less and less volume and volatility, it's almost inevitable that we should see in the coming weeks and months another explosive move, whether that's going to be towards the upside or whether that's going to be towards the downside. And that's where we ultimately need to make our decisions. Now, we will be building a portfolio, a $10,000 portfolio, but this is going to be exclusively for those who join into the whale trading school. So I'm going to give you the exact plan. If you do join into there, we're going to be 9 days out before we actually do go live with the very first workshop. So this is free instead of paying $1,999. If you use the exchange links listed below, that is your user ID that's going to get you the ticket into the course. We will be discussing that in the masterclass sessions that we're going to be doing during the course. But for the rest of you, I won't leave you without any alpha until such time as price reclaims this 21 weekly exponential moving average. This is one of the easiest strategies that you can use in order to protect your capital and in order to determine when is the best time to go risk on. Very simply put, it's dead easy. As long as price is below that 21 EMA and it's angled specifically towards the downside, it becomes a risk-off environment. And if you backtest this since the inception, the results are absolutely unreal. What you want to be doing is you want to be establishing those portfolios when this gives you a risk on signal, and you want to be cutting those portfolios when it gives you a risk off signal. So if you look at this over here, pretty much taking it without looking at any other factors, without looking at any overextensions from the mean, without looking at low time frame trigger plans, but using a real pretty simple monkey approach, which is just it's above and it's angled up, you long. When it goes below and it's angled down, you exit your positions. Even using the most fundamentally basic, simple approach, you can see you're getting thousands of % gains, right? So open long over here, close long over here because it's lost. You reopen your long, it angles towards the upside, it holds you in that position for a long period of time, and the results are absolutely insane. You're still in the long position, closes the long position after 11,900% profit, keeps you out of the market. This is not even including shorting the market. Re-enters into the long because you're back above, you get a 3,457% gain, and so it continues. I'm not going to go through the entire list, but even on the worst signals, this has pretty much got 100% hit rate. There hasn't been a single time that you didn't get a profitable trade off of this. When it hasn't worked well, it's still profitable, but only with about a 52% gain, right? As you can see over here, that one was about a 52% gain. And right now you can see it's taken you out of this position. This was also one of the worst signals that gave you a 31.77% gain towards the upside. And then on that closing candle, the 21 EMA angles towards the downside, and you're out of those positions. Now, there's a few reasons why we're looking at maybe, just maybe, this is a shakeout and you could start to reclaim some of these levels. And if you do, that's where the portfolio comes into play, right? If we look at the extension of the moving averages away from the mean, the average of where it typically would be, this indicator shows how extreme this has been, right? If you look over here, you can see the prior times that we got this low, you actually established some absolutely massive bounces. So in the very, very least, you're going to be looking for a big bounce, and that big bounce may potentially reclaim this, which is where your portfolios are going to become relevant once again, right? So we're looking also at the hash ribbons indicator, which shows the miner profitability, and the miners dictate a lot of the directional bias for where things are going to be going. Right now, this is still in a capitulation signal, but you can see these capitulation signals, when you look back historically, don't last too long. Soon after the capitulation signals, like this one over here, you do move into a blue buy signal. So you can see this would have been your bear market. This is the longest that you're going to see these capitulation signals form. And then you do move into a blue buy signal, which leads into bullish market structure. And that's where you typically want to hold your portfolio. So planning ahead, that's what we're going to be looking at. I think that it should line up really, really nicely with the next big move within the next 9 days, right as we do start whale school. So use the link in the description below, jump in over there. In terms of the 5-day time frame, we are starting to attempt to reclaim this moving average over here, but this is still a strong downtrend, right? So any bounces that come into the underside resistance at about $92,000 should be expected that it's going to find resistance over there. You can see the conglomerates of resistance over here as well, from the 9, the 18 EMA, as well as the 200 MA and 200 EMA, which price is currently captured below. And we're monitoring that RSI, which has currently been downtrending and rejecting. So we need to see this broken at the very, very least to shift that momentum. But given that things are very, very overextended, at some point soon, you are going to get, at the very least, a relief rally, right? It's just a question of what comes first. Do you get down into the $72,000 region first, or is the relief rally going to occur beforehand into the $92,000 zone, right? So we'll reassess as things unfold. Bears are still in control in the short term. You can see the Ichimoku cloud is in a bearish cross. You've had the bearish cross. This is showing a downtrend on the low time frames, even into the daily, right? So low to medium time frames still remain down. If you look over here at the ADX and the DI positive and negative, you can see that it's showing currently bears have a slight edge in a choppy environment over here. So these are the levels. We can look quickly at the 4-hour time frame. I did drop this in the Discord for the 𝗨 members yesterday. What we're looking at over here is the downtrend, the major resistance. This is really the zone that bulls need to get back above, right? If bulls can reclaim this over here, bulls take back control, get back above $94,000 and close price action. So if you saw something like this, keep closing candles over there, bulls take back control. We've preemptively dropped that level because that's the way that trends work, right? As you continue to put in lower lows and lower highs, you can start to drop those trends. this is possibly, right? We say possibly the new bullish validation point, meaning if bulls can get back above here, that is where some of the momentum may begin to shift. But it's a bit too soon, right? We can't say it yet because we need to confirm this as a high, which means we need to break down some of these key levels first. So stay tuned for that. Those of you in the Discord, that's just a rough explanation. I'll give you more details when and if this does start to shift, right? So if we break down, we can confirm that is a local top. Then we can remove that bulls take back control here, and we can drop that lower, which means we have an earlier entry point in terms of getting back into the market. Another thing I'm looking at over here is the USDT dominance, which continues to rise, but you do have some signs of weakness over here in terms of the structure. Small market structure break on very low time frame, breaking below that 5.35%, creating some swing lows on the lower time frames. So at least if this does start to roll over, that's going to flood at least the crypto market with some new money. Okay, another thing to be looking at as well, which is why I'm lining it up with all of these factors together. The factor one, or let's go back to this chart, is looking for a big mean reversion play. If you get that bounce and mean reversion play and you can reclaim the 21 EMA, then it could be back on, right? And if it is back on over there and you're simultaneously seeing the breakdown of the BTC dominance chart, which is starting to show some weakness, right? You're grinding into the support level. You've had many touch points, 1, 2, 3. Let's count that one as 4, 5, 6. 6 touch points with the 9 and 18 starting to cross over bearish over here. You know, that creates a very interesting environment. And not only that, but if you look at the altcoin season index, you are dropping down into that strong BTC season, which oscillates right into the green zone. So when you're deep in the BTC season, you typically only hold there for a short amount of time, and then the at least the pendulum swings right back into the favor of the altcoins. Not necessarily for an altcoin season, I would never say that, but at least for a bounce in the altcoin. So if you do simultaneously see all these factors play together, you know, the mean reversion over here from the extension away from the mean, the reclaim of the 21 EMA, the breakdown in the BTC dominance over here, at least temporarily, and the oscillators turning or changing direction over there, that could lead to the next move, which is why we're covering this 10K portfolio specifically in the course, right? That's going to be in the live workshops. Do make sure that you join there, right? There's a time and a place where you want to be concentrated in your portfolio, and then there's a time and a place where you want to be diversified. So for those of you that have completed whale school, you know this chart, you've been through this, you learned the lesson over there. We're going to now go diving in deep into the details of how to actually build a rock solid portfolio. And it's a little bit unconventional to what many may actually think a portfolio should look like. So if you want that information, definitely do make sure that you jump into Whale School. This is essentially what we'll be covering over there, right? These are the main topics that we cover in the school course content. So ETH BTC, still waiting for this to break structure. Your first area that you're looking for that to occur is a market structure breaking above 0.0258. Right now, this is still getting smashed towards the downside, but we are building an ETH long position. Remember, on Pinex, for anyone that wants to copy those bots, they are also listed below there. You would first need to sign up using the link in order to copy those bots, but that is listed below. All right, we can have a look at a bunch of the other coins. You know, if there is anything that you guys want to have a look at, please let me know in the comments. I will make sure to have a look at that. Let's quickly see using our key levels. You know, there is always an opportunity for a trade. This is what I'm talking about with the mean reversion play, right? If you look at these ranges, now Solana has essentially swept it's created the previous month's low. Here you have your previous month's mid-range. This sometimes creates a trade opportunity, right? If you start to see those deviations and price gaining acceptance above these levels, that can create a deviation play where you can start to play price back towards the upside. So we're nearing the end of the month as well. I think the monthly close is going to be vitally important, and that will dictate what is most likely to come next. Many of you may be wondering, you know, is the top in for the cycle? And that is a real possibility, right? The way that I'd be treating it is as such, right? Let's go back to this chart over here. So when you're going about your, your trading plan, this is why I'm still remain 100% cash, but I'm preparing to potentially be positioned back into the market. What I'm looking at is this, right? Assume that the top is in, assume it's in until such time as you can break and reclaim above some of these key levels. If you can break and reclaim above this, then you can say, okay, great, you know what, that was a big shakeout, but look at what you avoided, right? Exiting over here means you've avoided the potential that if you come back into this zone and reject and you push down, and even worse, so if you start to break down this parallel channel, which is governed price all the way towards the upside, that would lead you into pretty catastrophic bear markets, and you would have avoided all of that, right? So right now, if you have been following along, you know, you have no risk of even opportunity cost, because even the next big bounce over here means you would have to hold and backtest into the zone, which means that theoretically you can re-enter back at the exact point where we've originally exited, right? So this is the benefit of course, paying attention to the charts each and every single day and exiting when you start to see signs of things rolling over. And this area that we originally exited at now is going to be a massive, massive, massive cluster of resistance, right? So as Steal This Book again says, sold all my coins holding dry powder. I think that's the best position to be in right now. But remember, getting in early and getting in very, very aggressively and hard into your positions is where the life-changing wealth is made, right? So pay attention to the charts, jump into Whale School. We're going to be going through a lot of this information, and we're looking for reasons to potentially jump in, right? We're looking for the first sign of life that the market can give us, and we'll jump in, right? So reclaiming over here, keep an eye on SUI, downsloping trend line. You've got your range levels marked out. It's the Monday high from this week that we've just had, has been set in play over here at 239, and that lines up with the previous month's low. If you do start to reclaim that, look at this. Look at what SUI looks like. That becomes a phenomenal trade opportunity, right? And sometimes the way that I build my portfolio is it will start out as a potential trade opportunity. And if it breaks in and you break the structure, you've broken the downsloping trend line, you've deviated back into the trading range, you know, I'd be looking to trade this up to this zone over here. And if, you know, it smashes through that level, I might change this into a swing trade, and then suddenly this becomes a portfolio play, right? More on that in Whale School. Come to the workshop. We'll discuss this at length. This is where we'll discuss these types of things. Okay, hype as well. We were looking to trade this all the way up to the $20 zone, $18 to $20 zone, which is the underside resistance in the previous month's low. So that's still in play. We can look over here at Sonic. Okay, Sonic is just very much range bound. Personally, I would love to see a deeper sweep here for Sonic, you know, to fulfill some of this inefficiency at this wick back into give or take. That's going to be about 35 to 36 cents. I think that will be a good zone to keep an eye on if Bitcoin does start to play ball. But Phantom is going to give you the main history of this chart, right? If you want the full history, go to Phantom. All right, what else? What else have we got over here? Let's see quickly. How's Mantra doing? Mantra being one of the strongest coins over here. It is starting to show some weakness, right? This is starting to create, in terms of trend trading structure, it's created lower lows, lower highs now. But that's always the debate, right? Are things in a trend or are they in a range? Well, if this can start to break back above the previous month's mid-range over here, that can create a trade opportunity back to the previous month's high. And then if it breaks out, of course, then you're still in a trend, right? And things are looking good. All right, what else have we got? Let's see some of the top memes, how these things looking and how they're holding up. So on the daily trend over here, daily time frame, you do have your major range lows. Look, Pepe is trying to attempt to get back above the previous month's low. So if it can do that, it will be similar. That's a deviation play. Mean reversion, you could trade that up to 1069 or the last 4 digits, and then watch for and expect a rejection, because that would be with the lower highs. All right, cool. Let me know what else in the comments, guys. Again, if you do want more information on this, the workshops are where it's going to be one-on-one. Use the links in the description below. If you do sign up to Altbank, by the way, this can be your ticket into any of the schools, not just mine, Eric Crown's, Sheldon's. There's a new one coming out, you know, a new crypto school fundamental one, which is coming out. This will also get you in there. So use the links below there. You can unlock 100% cash back on every single trade. And then there is currently a trading competition, right? Where you can unlock up to $3,500. And that is for the first few people that join, right? Distribution of those rewards will be within 5 days of you joining. And then you use that. Come here, click there, put your email address in, and then you'll take your user ID from Altbank, and you can use that to sign in. All right. That's it from me, folks. Smash the like button, hit the bell notification, subscribe to the channel. I will see all of you on the next one. I hope you have an absolutely stellar day, and cheers.